Welcome everybody to a new analysis of Tradomics. In this episode, we're going to have a look at some main Swiss stocks. So for those of you that have landed on this channel, here we apply a quantitative analysis that is based on cycles. The critical advantage over the technical analysis of the wave analysis is that at any point in time of the chart, you can predict statistically by when the price can follow a certain pathway. And in order to do that, here we have on the right hand side, as always, the duration of the different cycles that are split between annual cycles, a 6-month cycle, 3-month cycle, and so on. If you want to know more about our methodology, you can click on the pop-up banner on the right hand side, Introduction to the T-cycle analysis. Uh, in any video, I leave intentionally errors in order to make the following video by talking about what I was saying. So you can have, by following me, complete transparency about what I was saying and what the market has done. So then we can follow the trend and you can be more aware about the future direction of the price and the pathway. In these videos, I do not talk about operational or how, where, and when to open a short long position, but it's merely an analysis that is based on the cycles. If you have, for example, in your portfolio some stocks you would like to follow, then you can click on the bell and subscribe to the channel so you get notified as soon as possible regarding our analysis, whether you are a short-term trader or you're a short-term investor or even a mid-term investor. So given that Tradomics is based in Switzerland, this is a video that takes once every month, generally between the mid of the month. And we talk about 8 different stocks that are listed on the SMI 20. But if you would like to have more stocks analyzed for you, you can write to our email address, tradomica@gmail.com. So let's start with Roche. So according to the last video that I issued a month ago, I was saying that Roche has a bright future ahead because we have a nearly T plus 5 upward cycle that has positive shape. The positive shape means that the trend of the price broke up the swing from which the T plus 5 upward cycle started. And given that the time in which the price broke up the swing from which the T plus 5 started was less 136 days compared to the minimum duration of a T plus 5, then we can predict at least that the price will continue to rise until at least 189 bars. This means that if we gauge the total duration and we stretch the duration until the minimum duration, we can predict that the price will keep rising until 30th of April 2025. This is the basic scenario, but we know that the duration can also um, let's say, stay in the trend until a median duration. Median duration is approximately 252 days, so until 31st of July. Here we have actually an earning release 24th of July. But the best case scenario, at least for mid-term investors, is that we can prolong the rally until end of November. Okay, so 339 days would be basically end of November. So this is a tremendous advantage over technical analysis. And by watching this video, what the probabilities are to continue on the pathway. I was predicting also in the last video that we could have had a bit of retracement to start a new cycle, and therefore analysis correct. Now we have to update the chart as always and try to figure it out which kind of cycles were developed in between. So in the last, not in the last video, but in the previous videos, I was also saying that here we could have had the possibility to close at t+5 because we had the duration of a t+5. This cycle was slightly neutral or positive because the low from which it ended was higher compared to the low from which it started. And see how much rally we have done so far. So now we can definitely say that here we have more than some clues that from this low we might have definitely a t+5. I still say we might have because we need a certain amount of candles above that low. Precisely, we need um, more than 45 candles. But this is definitely the beginning. This might be definitely the beginning of a nearly downward cycle. And see that with these candles we went higher this high. So therefore here we have more than hard clues that from this low we can have a t+5. In the meantime, we have also draw some other cycles. So for example, from this low here until this low here, we have at the first cycles that took a duration of 11 days. So here we have a weekly cycle. So here we can update the chart. We have had some other cycles, like for example, this one, and this one. Now, considering that here we have had a bit of retracement, if we gauge the total duration from this low here until this low here, we have 39 bars. So 39 bars is close to a maximum duration of what? A t+2, so a monthly cycle. So here we can say that from the 19th of December until the 20th of February, we have had our t+2. Now, we don't know whether from this low here we can have another t+2. But if we follow a regular pace, then from this low here, we can expect another t+2. And we have already different conditions, okay? So this is what is happening regarding the downward cycles. So now I clean up a little bit the chart because this was just an explanation of what has happened. What we have to focus now on is what is going to happen. So in order to do that, we have also to define the upward cycles. So upward cycles are cycle connecting top with other tops. In this case, we have added the first t+2, so monthly cycle. And guess what? From this top here until this top here, we have had another monthly cycle with a maximum duration of 43 bars. So here we can have a t+2. Now, from this top here, do we have a t+2? The answer is no, because we stay lower this top not so for so many bars, and from this top here until this top here we have add not just a t+2, but we have add a t+1. So we have also to report here from this top another t+1 and not a t+2. And from this top here we can confirm that from that top we have had a t+1. Now, why is important to understand at which point in time we are with the upward cycles? Because the upward cycles are our compass to understand how long we can continue to keep rallying before a retracement. Because of course, in the midterm, we can continue the rally, but we have some retracement in between. And this is why it's important to define which kind of cycles are drawn on the way. So now what we can say is that from this top, which is the beginning of a yearly cycle, until this top, we have 155 bars. And from this top, which is a 3-month cycle, until this top, we have 90 bars. So from this top here until this top here, technically speaking, we have a 3-month hybrid cycle, which is a cycle that is that has a duration between 90 and 93 bars. So here we have to or I have to flag up, let's say, a yellow light, because here from the stop we might have the beginning of another retracement, because we have all the duration for a t plus 3, end of a t plus 3, and a end of a t plus 4. So if from this stop, or let's say if this stop will be not broken up in the next week or in the next 2 weeks, but rather we will have a steady state situation in which the price will follow a flat pattern, then from this stop here we might have the beginning of a t plus 2, t plus 3, or t plus 4. Okay, so be careful in the next weeks or 2 weeks that we will not have a harsh retracement, but instead the price, statistically speaking, consider that we are wearing out most of the time for a t plus 3 and a t plus 4, the price can stay into a steady state. Of course, if the price will return quite quickly over the stop, then here from this stop we will have not just a t plus 3, a t plus 4, but a shorter cycle like a t plus 1. Okay, so in the next week or in the next 2 weeks, given that we do not issue or public this video every week, what we have to see is, or what we have um, uh, to bear in mind is that the stop is whether this stop will be broken up or not. Okay, and this stop is at 333.6 Swiss francs. Okay, so bear in mind that statistically speaking, we have more possibility in the next 2 to 3 weeks to have a flat situation. Be careful, because if we go over the stop immediately, then we will have more time from this t plus 5 to have almost the completion of a t plus 4. And when a t plus 3 or t plus 4 is completed, then you have to expect a bit of retracement. Okay, but it's also true that here the volumetric tendency is particularly high. So that's why here I'm saying that the probability to have a flat situation in the next weeks is more, let's say, as a high likelihood compared to either a short retracement or the continuation of the trend with the same strengths that we have seen so far. The second company in focus is the direct competitor of Roche, which is Novartis. So here on Novartis, we have a similar pathway, but the difference compared to Roche is that for the time being, the price has not broken up the swing, which is our critical checkpoint to understand whether we will have a T plus 5 upward cycle that will turn into a positive cycle. And therefore, if, as said for Roche, if we break up this I in the next weeks, then we will have a situation in which the price can continue to rally until the minimum duration of a yearly cycle, which is 189 days. So in this case will be the 6th of June 2025 at least, because at most we can continue to rally until end of November roughly. Okay, so first of all, I was saying in the last analysis that this swing was a critical checkpoint to understand whether the price over the short term could have continued to rise. So we have had this the break with this candle. It was done on 7th of March, and therefore we continue to climb for another day and a half. Of course, here, if we split the upward cycle, we have had 13 bars, and here we have had another, I guess, weekly cycle, 10 days. Now, considering that from this stop until this stop, we have had 22 bars. So also the segmentation was definitely correct. So from this stop until this stop, we have had a T plus 1 with 22 bars. So from this stop here, as I said for Roche, now we have to see whether we will have a bigger cycle or a wider cycle than a T plus 1 taking place. But this is something that we do not know at the moment because the cycle has just started. We have had pretty much an engulfish bearish here, engulfish bearish candle, and we hit with this candle approximately the moving average 21. In the meantime, we are going to have a golden cross, so definitely the situation on Novartis is getting better and better over time. In a non-suspicious time, what I was also saying, not in the last video, but in the last videos, that from this low here, we could have had potentially the beginning of a T plus 5. And if we gauge the duration from this low here, which is the downward cycle T plus 5 until this low here, we have 292 bars. So 292 bars at that time versus 339 bars, uh, you can simply calculate how many probabilities from this low there were to start a new T plus 5s rather than continuing falling down. Okay, and this is the beauty of this methodology, because at any point in time you can, with the duration, you can statistically predict by when the price can continue rising or having a reversal or continue and following a certain pathway. You have really probabilities, black and white numbers that can change every day. Okay, and this can facilitate tremendously your trading, especially how to manage long short position. And this is something that you can do, of course, also in the intraday session by using shorter duration that I do not report in these videos because this is more for an intraday trading sessions. So from this low, then we have also to figure it out which kind of cycle we have had. So until the low of the 21st of February 25, we have had 40 bars, but here this low is lower compared to this one. So I'm gonna use the candle of the 14th of February 2025 to define the end of a T plus 2 downward cycle, and now we are on the second T plus 2 downward cycle. At the moment, we have had the first weekly cycle here with 8 bars, so let's update the first weekly cycle. From this low that was done on the 27th of February, we have here potentially the closing of the second weekly cycle, but also here we can have the closing of the second weekly cycle. So this one looks better because it's lower compared to this candle. So if here, if with Friday's candle we have had the closing of the weekly cycle, then what we can expect for the beginning of next week is to have the beginning of a new weekly cycle that might be not just a weekly cycle but also bi-weekly cycle, because here, so it's first weekly cycle, sorry, first, where is it? It's here. First weekly cycle, second weekly cycle. Then if here we have a T plus 1, then we can have a stronger push to the upside that has to go over the stop at 97.52. So let's see whether this will be the case. In this case, so if this will be the pathway to follow, then this stop will be the first checkpoint. This one at 97.52, and the second one will be this one. Be careful, because if we're gonna have a push to the upside that will go over the top, then this top at 99.17 will be the next check mark, and if we go higher at the stop, then we can proceed with the rally as said until end of April, but even beyond. So now with this video, you are aware of the situation we have on Novartis as well. So let's move to the next one. The third company in focus is Nestle. So regarding Nestle, we were saying in the last video that we could have proceeded to to continue the rally to the upside. I was saying that here we could have expected another retracement and a continuation to the upside, and I was also saying that this high was the first check mark to understand whether here we can have a new yearly cycle. All the analysis correct. So from this low here, we can start writing a T plus 5. We can, I will keep the question mark because we will need some more candles. But here we are basically in a reversal, in a trend reversal. Okay, this was triggered also by the earnings release that gave a push to the beginning of this new T plus 5. But I was also saying in the previous videos that here we had all the sufficient and necessary condition to close this negative T plus 5. And from here, we can also expect not just a T plus 5, but a multi-yearly cycle, because we kept falling down with Nestle, not just for the last year, but also from different years. So if you have to imagine a big cycle here, so this is the closing of the first, second, third, fourth year. So here we have closed a T plus 7. And if that T plus 7 is closed, then you can expect the beginning of what? Potentially another T plus 7. But a T plus 7, you have to know that is a between 3 and 5 years cycle. And if here we have a 3-5 year cycle, you can expect that there is a lot of room to continue going up. Okay, so first of all, let's clean up the cycle. And what I would like also you to note is that all this kind of information are for free. So what is the value to follow for free a channel that is giving you such insights? Well, you can figure it out, the answer. So from desktop here until desktop here, we have a T plus 2. So we can update the chart accordingly. Here we have a T plus 2. Now this analysis correct, analysis correct, analysis correct. From this top here, we have at the beginning of a new weekly cycle. Okay. And now here we have a bit of a challenge because we have had 1, 2, and 3 swings, but I would tend to consider this swing as the weekly upward cycle here. And from this top until this top here, we have another 9 bars, so another weekly cycle. So in total, we have 26 bars. So we have already the minimum duration to start eventually at T plus 2. So you can expect here not to return back to this top immediately. But let's have a look at the also downward cycle. Here we have 27 bars. So for the next week, what you have to see or to bear in mind or to put for example an alert is the stop, because if we will return back to the stop, then you will have to gauge how many bars we will spend lower this low. And if there will be more than 7 bars, this could be the beginning of a T plus 2. But if we will return back to the stop before 7 bars, we already have 4 or 5, then this cycle will be the beginning of a T plus 1. I also have to say that from this top here until here, we have 190 bars. So what we are doing at the moment is also to close this T plus 5 upward cycle. Okay, so here we have two forces that are pushing to the upside. But 190 bars is already a minimum duration. So we can expect, given that here we have a T+5 continuation, of course, of the rally, and we still have time, and one of the target price will be here at 93.32 bars, and then the second target will be 98.62 bars. Over the short term, let's see whether we will return back to the stop immediately. What I can do also for you is giving you more short-term scenario. So here we have the first weekly cycle. Here we have 6 10 bars. Here we have the second weekly cycle. Here we can have the weekly cycle both either on this low or on this low. But the difference is that if we have the weekly cycle on that low, here we have 9 bars and we have put an end of this weekly cycle. Otherwise, if we have the weekly cycle on this low, here we can have a little bit further downtrend. So I will put the weekly cycle here in between. So if from Monday onwards, we will start a considerable push to the upside that can also get close to this top. From this low, we will have a weekly cycle. But this weekly cycle can be even more than a weekly cycle because we have all the condition to have what? At least a bi-weekly cycle or more. So if the push will be particularly high, then this scenario will be a favorable scenario for opening long position, especially if we go over the stop in a little time, which means by Tuesday eventually next week. Otherwise, if we continue to have a bit of retracement, the weekly cycle has started here, and we are closing the second T+2, that might be even a T+3. Okay, so we will have these two ways for the next week, but then you know that this stop will be the first check mark for continuation of the uptrend. In case we are closing a T+3, the second checkpoint will be here at 87.66 Swiss franc. But in any case, the tendency over the, let's say, midterm is to continue the rally to the upside with the targets that I have given to you. Next company in focus is Swisslife. So in the last analysis, I was saying that the TES swing was a critical one to understand whether we could have had a T+3 in development upward cycle, and therefore I was already putting you in a condition in which you were aware that we could have had a retracement. We didn't have the retracement exactly where I was saying, but you know that this move was already predicted a week before. And which kind of a quantitative analysis can give you such information? So here we basically went higher, and here was actually putting a question mark, but this move was already forecasted, even in the light of an earnings release. So you can just tell me what is the advantage here? Because the line and the arrows are speaking for themselves. And we can be really precise. And this is just the daily chart. And we can also have even more precise information in the intraday. So now from this top here until this top here, we have had 38 bars. I was already putting you, I was trying to give you insights on this top because we have had already the minimum duration of a T+2, but here we went up to the close to the maximum duration. So this was perfectly in line with our durations. So monthly cycle here was abided, and here now what I was saying in the last video is that we can have the beginning of something that at the this point in time seems to be not just a weekly cycle, not just a bi-weekly cycle, but this seems to be a T plus 3 at least, okay? Because with this fall, we went lower this swing, and this was our check mark, okay? So here, let's clean it up. And from this low until this low here, we have 13 bars. So this one is a first T plus 1 bi-weekly cycle. We followed down, but this candle yesterday was quite reassuring that, despite a first reaction to the downside, we have recovered quite a lot during the intraday session. Here we have 16 bars. Now, if we gauge the total duration from that T plus 2, here we have 29 bars. So this fall can be the closing of what? A T plus 3. See that algos are, let's say, are set up in a way that nothing is left to the cows or nothing is left to the shunts, but there are precise, let's say, scheme to follow. So from this low here, I would say that we don't have a T plus 3 anymore, but we have at least a T plus 4, okay, a 6 months cycle. We have then to understand whether this low will be the beginning of a T plus or new T plus 3, or if we will in the next week return to the absolute lows. This is quite a critical point. Actually, we can do another thing. So the duration from the low of the 20th of February until the low of the 14th of March is 17 bars. So here we have to figure it out on which candle we have at the closing of a weekly cycle, and potentially I would say is this one. So let's make just an exercise. If here we have the closing of the weekly cycle, here we had already one candle. Here we have a weekly cycle that is negative. Now, if we gauge the duration of this weekly cycle, we have 5 bars. So, technically speaking, if here we have a weekly cycle that is negative, the expectation is to return to this low. Okay. So this is the first condition that you need to be aware of, especially because if here we have a T plus 3, but we can have eventually even a T plus 4, because it's true that here we have all the condition of a T plus 4. We have 76 bars, and over the midterm, we can expect a return to the all-time highs before having a T plus 5. But it's also true that the volumetric tendency here on Swisslife was so high that we lost a little bit the compass, because the last T plus 5, the last yearly cycle that I can define, was back in 2023. So I would not exclude the fact that from this low we can have even a T plus 4 or a T plus 5, because you see that I couldn't segment other T plus 5 over time, but just a T plus 4, T plus 3, T plus 3, T plus 4. So if here we have a weekly cycle, it's true that the weekly cycle can be also closed on this low here rather than on this low. We might also return back to the absolute lows. So it's true that also the candle here is encouraging for long position, but I'm also here to say that from a time perspective, you don't have to let's say, to take it by granted that will return here on the stop immediately, even because the total duration here is 8 days. So here we have a weekly upward cycle in development. So, and this is confirmed. So be careful now on Swiss Life to open a long position. First thing first. And then the second thing is that you have to monitor this low, because this low is critical to understand whether from this candle on the 7th of March we have a weekly cycle that is negative. And given that we have this possibility, would be not savvy to start opening long position on Swiss Life now and also for the next week. So be careful to this low. And if eventually we are closing the T plus 3 and let's say rather than the weekly cycle here, we have the weekly cycle here, so we have completed also this cycle, would be eventually savvy to considering eventually what? To considering long position at the break, only at the break of the stop. But this plan B has less likelihood to happen in the next week compared to this one, because we need time to develop a T plus 3. And in order to develop a T plus 3, we need on average at least 20, 25 bars. The minimum duration will be 13. Okay, so until the 20th of March, but 13 bars, it's generally too, it's a little time. So we would need at least 20, 25. And if we have to stay lower this low for 20, 25 bars, the way forward is to return back down to this low. Okay, so I explained you the situation. We have two ways. One is more likely to happen, the other one is less likely to happen, but you have all the targets to manage properly your positions, whether you are a trader or a short-term investor. So the next company or bank in focus is UBS. So according to the last analysis here, we have lost strength, and we turned this T plus 2 into a negative cycle. So now the duration is has reached the minimum duration, 24 bars. Therefore, we have eaten the moving average at 200. Here we have all the necessary and sufficient condition to close a T plus 2, even if it's a minimum time. So from this low here, we have to see whether a new T plus 2 will take place. And considering that we have bounced back from the moving average 200 with a certain strength, so here we have all the condition to expect a T plus 2 if we will not return back to this low immediately. With this situation, we have had also the condition to close the first T plus 3, and we have also the condition to eventually close a T plus 4 at 151 bars. So from this low here, we can expect further push to the upside. That has to be monitored over time. Definitely from this top, we have a 6 months upward cycle in development, and here we have had the closing of a T plus 1 upward cycle. What needs to happen now is that we have also to close what? A T plus 2. Therefore, what we can expect at the moment, especially for next week, is that if here we have a T plus 2 and we have also to close with a new cap at T plus 2, we are having two forces pushing the price to the upside. So therefore, we can expect a more uptrend over the short term. If we gauge the total duration, we have at here 10 days, but also here 5 days, here 7 days. So 10 days, be careful, because before having this hookup, here we have 10 days. So either we have a weekly cycle that is already positive, or we can expect a little bit of a push to the downside before going up, especially if here we don't have a weekly cycle. because if it's from this top we have already a weekly cycle, then we don't have to retrace too much from Monday onwards, but we can go straight forward up. In order to mind you that here I put a weekly cycle here, but with a question mark. Okay, so high likelihood from tomorrow, so from Monday onwards, to have a bit of retracement and then starting having a knock up towards the upside. If the weekly cycle is here, so on this candle, then we can have more strength to the upside immediately for the beginning of next week. Otherwise, the weekly upward cycle, if we gonna have one or two or three red candles, will start from the candle of the 14th of March rather than the candle of the 12th of March. Okay, so this is a little bit a technicality, but just to give you the idea of the complete picture. Let's move to the next one. Next company in focus is Swisscom. In the last analysis here, I was flagging the possibility to continue to go down if this was not the beginning of a T+5. We went down, so analysis correct again. And with this low, we went lower this low. In terms of a quantitative analysis, given that um, or T-cycle analysis, this low is lower compared to this one, the closing of the T+5 has happened on this low. And here we have already brilliant force or a significant force to start a new cycle. New cycle that is a T+5, because on this case we have, so in this first case we had 219 bars. Given that we went lower, we have 255, so a median duration. So now we can expect potentially the beginning of a new T+5 yearly cycle from this low. What does it mean? It means that we need to have at least more than 50, 60 bars over this low. And when a T+5 is in development, then we have a great force to the upside. So here I will change or slightly fine tune the chart. Here we have add a T+2. Okay, 35 bars. And from this low here, so here was saying we can continue to further go down because this weekly cycle was already negative. And actually we reached 10 days. So all correct. This might be the beginning of the T+5. Okay, considering that we went over this swing here, and this potentially is the beginning of a new T+3 3-month cycle, because here we have 76 bars, but here we have 98, so too much. Then here the trend will be to the upside, because this is already a negative one, and if a positive one, and if here we have the push of a T+5, then the destiny is to return over the stop, and also the target will be this one. I don't know if you have the patience to watch all the analysis, but here back in time I was saying this is a T+5, this is a T+4, and if this is a T+5, we have to return back to this absolute top. In the course of in the development of the cycles, here I change it with a new T+5, because here we seems to have a wider cycle compared to this one. Okay, here it seems to be wider. But let's see, because if here we have a new T+5, then of course the target, the ideal target would be to go higher, 571 Swiss francs. So let's see if this is going to happen in the next months. In the meantime, here we have 22 bars. So here we have a T plus 1 upward cycle in development, but the forecast is to return back to the stop at least to close what? To close the first T plus 2. And the return back to this to that top can also happen next week. But this is the way forward for Swisscom. So bear in mind that the next target is here at, as said, 539 Swiss francs. So here we are close to the ending of the video. We still have a couple of stocks to go through. Here we have Geberit. So this low here, as I was saying in the previous videos, um, revealed himself to be not just a T plus 2, but what? The beginning of a T plus 5, something that we were expecting. And see what happened. We have had really strong candles to the upside that we went higher at the stop. Critical point, I will tell you why in a second, but if you follow me since a while, you know already what I'm gonna say. So analysis correct again, all analysis correct, I have to say. So here we have at the closing of a T plus 2 upward cycle. We were expecting downtrend because we had to start a new T plus 2. This T plus 2 turns immediately into a positive one after really short time. This is quite seldom to see, eight bars. So we add the weekly cycle after 8 bars, then we went further down and then up. So I'm pretty confident to say this is a T plus 2 because here we are waiting a T plus 5, and I will not even put a question mark. Here we have a T plus 2 in development, so 2-month cycle here, 1-month cycle here. This weekly cycle positive and turn it to the entire T plus 2 cycle positive. But with this candle, the T plus 4 turning to a positive and the T plus 5 turning into a positive. Now, what we can expect from the next weeks is to continue to go up. How long for? And this is the critical question as always. You know that by following this channel, you know how long. So we have reached 194 days. So first of all, here we have the minimum duration to close at T plus 5. So we are not with the perfect or ideal situation to open long position, knowing that we have uh, again time to reach the minimum duration to in which the price can continue to go up. But here we have the sufficient condition, minimum and sufficient condition to close the T plus 5 and to begin a new T plus 5. So this is more on the midterm. On the short term, we know that this is a positive cycle, and for the time being, we have reached a total duration of 19 bars. So it's true that we have the minimum duration to close at T plus 5, but thanks to this segmentation, we know that we can continue to go up with let's say for a duration of until 19th of March 2024 and 19th of March 2025, sorry. But we can extend the rally until the maximum duration. This would be the best case scenario until the 16th of April 2025, especially in the light of the fact that here we have a T plus 4, and this T plus 4 can continue until, let's say, a median duration 120 bars. Then we can also stretch the rally until the 13th of June 2025. And the 13th of June 2025 is also a median duration of a T plus 5. So the likelihood to reach a median duration of a t plus 5 is there, and therefore we can continue to go to keep rallying until that date or even beyond. But you have to be aware that we have at the same time the minimum sufficient condition to close this t plus 5. So they can continue a little bit less than a medium time and then start a retracement. So having this in your mind, that you are more aware about the situation we have on Geberit, and so you are not surprised if in case we start seeing harsh, let's say, downtrend over the short slash mid term. But considering that also we are at the beginning of a t plus 5, this situation has really few chances to happen in the next months, but rather we can continue to prolong this t plus 5 upward cycle for the next months. Last but not least, we conclude with ABB. So in the last analysis, this wings was really important to understand whether we could have had a negative cycle, and we went lower this low, and therefore here we have a negative cycle. Now we have reached 16 bars, but we have to see whether this is a t plus 2, because if this is a t plus 2, we have had the first t plus 1, then we are trying to hit the moving average 200, but the moving average 200 is giving a lot of resistance: 1 bar, 2 bar, 3 bars, 4 bars, 5 bars, 6 bars, 7 bars. So for 7 consecutive days, the moving average was not broken with just this candle, but when we return immediately back down. So if in the next week we will not return in a steady situation over the moving average 200, then the destiny is to return lower this low, because here we have a t plus 2 that has done what a t plus 1 eventually, new cycle, but then given that it's negative, boom, we can return lower this low, and at this particular point in time we can lose another 5%. Is it something that it's pretty clear from the market? The answer is let's see at which point in time we are with the t plus 5. So here we have reached 326 bars. We can have this continuation to return to this low, but let's have another check. But given that here we don't have a t plus 5, but the time to close a t plus 5 is really, it's basically is running out. So the possibilities, in a nutshell, to return back down to this low are there, but are not so high because we are already wearing out the duration of a t plus 5, 327 bars. If we will return back down to this low, we will go 339 bars. So we have a time until the 21st of March 2025 to do this move. But after that, the time will be run out. And given that here we have a t plus 5, that is a positive, the expectation is to return back to the stop. This is more a mid scenario. So you can imagine the competitive advantage that we have. We already know that at least this is a bear tongue, and the bear tongue are, the cycles that can really screw up the analysis. But thanks to, thanks to some gods, this is something that is seldom. We already know that we will return back to the stop, and the gain here is more than 16%. Okay, so Be aware that we can have this last try to achieve this low here, but then once the t plus 5 will be finished, then we will need to return at least in this, let's first say this area and this area, okay? Because time here is almost finished, okay? So we have time until end of the month. Eventually, for, let's say, for completeness, we can have even a Bayetong of a t plus 2, so we can still have another month and a half in which we can prolong the duration of t plus 5 and define in detail. This is something that I was also saying in the last videos. But then a new push to the upside is expected. Another thing that I have also to to change is that from this t plus 2 we have a t plus 3, t plus 4, so 3 months, 6-month cycle. Okay, and from this top here we have a t plus 2. From the top of the 15th of July until here we have 132 bars, so perfect. So I would say this is even a t plus 4 rather than a t plus 3, because now we have several candles below this top. So let's put a t plus 4 here. So precious valuable insights in this analysis. In terms of upward cycle here, potentially we have had the beginning of a t plus 2. So that's why I would not be surprised if we return back down to this low. But then if we will do that, then the time will be finished. And therefore you can expect either a bigger tongue, as said, or immediately a new t plus 5 that will push the price further up, at least for another 18 with the moving average 200. So let's see whether in the next weeks we will not return back to the stop, and therefore we will have a t plus 2 upward cycle. But this is the situation we have on ABB. So I hope this video has given you a lot of insights. It's fundamental that you follow all the episodes in order to, first, if you want to learn the technique, or if you want to have analysis analyzed for you, then writing an email, or if you eventually want to learn more, then write to tradomica@gmail.com. You see, I always show the results, and the results are definitely great. You can basically measure how many times the analysis is not correct, and I say it in total transparency, and how many times the analysis is correct. And I can tell you that the failure rate is around 10%, 15%, but 85% of the analysis are correct. And if you have a technique, or you can manage your position in which an 85% success rate is there, then you can also gain money. So that is all. Thanks for watching, and see you to the next episode.